Hi there. Hey, this is DayTraderRockStar. This is the Market Radar and kind of a prep video for Friday, which is tomorrow, which is November 9th, is it going to be? Yeah, November 9th. And that's another thing. I'm actually doing this live. So in the room, Viljar, anybody out there, does the market open on Monday? Can anybody confirm that for me while I start off this video? Because that's Veterans Day, Monday. It's usually November 11th, right? And I'm not sure. The market's open or closed? I forgot what my question was. Are the markets open? Yes, the markets are open, I think. That's the answer. Thank God. Thank God. I said, oh my God. 3 days. Hate that. Anyway, what a week, you know. We had the election, midterm election. We had a great show. I'm editing that now, and then we actually will take a look at the big picture here. So, you know, we did that show. We were making the predictions, you know, how the market was going to react. We were actually watching that 200 period moving average hold this market back for a few days. And, you know, I was very bullish on this market moving up into the elections. Even though it wasn't a tremendous victory for the Republicans, the market took it as a positive. And, you know, maybe it was the gridlock, maybe it was what was expected, maybe it was any, you know, whatever reason, the market ran with it. And it makes sense. You have to think about this making sense. A lot of people are saying, oh, it's going to pop and then maybe drop. I don't think this market's coming back down, people. Honestly, there was no reason for it to actually sell off because it was going to buy it right back up. The only reason it was going to sell off is if the Democrats won both the House and the Senate. And it probably would eventually went back up anyway. So the gap up was not even it wasn't even like sell the news. It was like, all right, this is how things are going to be. And, you know, and even today shows that there's not much action to the downside, even though we're extended up here. The next big event will be the holidays. You know, the holiday season. This is a very bullish time of the year for the stock market, and I think people are going to realize that, and they're going to say, "Hey, you know, we're probably going to have a fantastic holiday, or what we call a seasonal rally here." I'm not going to call it the Santa Claus rally because that's just a 2-week period. So I think we move up into Christmas. You know, it's November. Yeah, we're pretty close, so we could actually get going here. I'd like to see that. Right now, the daily is, and you know, it came down to the weekly too. This was a big thing. This weekly oversold level on the markets is textbook, just like it was back here, or at least back here. And what happened? The weekly got oversold with a big candle, and then right when we had that big positive candle, took out the previous week's high. It was very bullish. We started turning back up, started a multi-week rally. So you got to think there's a good possibility of a multi-week rally. Here was a beautiful divergence back here all the way on 2016. There was a beautiful weekly divergence, and that was probably the last big pullback we had. No divergence here, but just a standard pullback. And in all these very steep cross back up, I call these almost like a Nike check mark if you just take a little above the bottom and then spike it up. All of these are not rounded. They're very aggressive buys that come in. This just falls right into that same category. So this looks really good for a continued rally on the big time frame. The daily time frame, you know, that's going to be, you know, you're going to have your down days and your up days. The 60-minute time frame, that's fine also. I mean, we could start to key in on that on the pullbacks if you're bullish. Then you want to really have that 60 on your side. So maybe there is a little pullback to be had here. You know, maybe not. You know, like I said, I'm quite bullish going forward. Plus, we have the trade agreement's going to come down, and we have the G20 coming up. meeting. December, there's going to be a lot of talk about the interest rate hike, where everyone's expecting something. Yet if they don't hike, then everyone's going to kind of accuse the Fed of bowing down to Trump, who has been saying that the Fed has been too fast in their raising of rates and kind of cooling things down too much and not letting his policies work. So there's kind of a dispute there, and that's probably going to come into focus December's meeting. Is he going to, if Trump, continues to kind of butt into the Fed policy, that's probably not going to be a positive thing, but that's something new, because I don't think any other president really made made any monetary policy, any type of comments towards that effect. Anyway, that's new ground to cover. But you can tell everything looks good. Now we just have to find the right stocks. If you're finding the right stocks, don't have to worry about the ES trading. ES trading is down, is down pat here. There's no doubt that you can make money trading the ES. Maybe not as fast as you want, but there's no doubt we're showing you the best setups. I'm not saying I am, but also the members in the room now are able to identify these patterns really fast, and they, everything we mark out tends to play out. It's just about waiting for the right look and feel of the setup. Now that's key. That is so key. That's why your criteria is so important. The better the criteria, the better the setup, the better the probability it's going to work out. The higher the probability. So you even have, it's just a mathematical comparison. There's also when I say that, I'm just talking about the trends, the highs and the lower highs, and the highs and the higher highs. You could back test that, but use the 20 and 80 line as that's the most important thing, I say. The steeper the line, the steeper that divergence, you can see the better it is. And you might as well, up here, I figure most people understand when we talk about the divergence up here. You might have a visual one. You can see it might be a little bit lower, but that becomes so embedded up there, and it can be so hard to see, like over here. And that's just, I'd rather have that really good one. And I might not give me as many trades, but it will give me the best trades and motivate me so much more for these. So that's where we stand on that. So the ES is no problem. That's already set. The 5-minute thing. I'm working on the overnight alerts, which you'll be getting soon, because I think those are going to be the best setups, especially the volatility continues. The volatility in the market continues during the day. It carries over and gives us a great range at night, and actually gives us great signals. And you don't really, I kind of feel that you don't have to really compete with a lot of the algorithms, maybe some of the, that might not always be. And when it does get volatile, like election night, I'm sure they turn those machines on. But as you can see, the volatility kind of dries up overnight. But the signals are still there, and when you do see them, they still react, and they give us enough movement to make some good money off of these. So I don't want to miss any more of them. Every qualified setup, I want an alert on. And it's going to be the strictest of the criteria is going to be the best criteria. I already read it out. It's already being worked on. It's almost fail-proof. Famous last words. That's what I think the Titanic guy said. So let's see, market actually pulling back. Let's get back to the watch list. So that was a little of the market radar section here. But let's go over a couple stocks just to get you prepared for tomorrow and the beginning of next week. These are my favorites, and some of these you're probably going to find on the HPS watch list. Might as well do an update to that. And I don't know if I'm sending this out to everyone. It's definitely going out to the members. If you happen to get it and you're not a member, let me explain one thing. First of all, I try to keep, this is all member stuff here on the HPS site. Now these are the HPS setups. What I do the watch list on and set up and everything is thing goes on this. And the stock goes, if it qualifies under the methodology, I'll write out a trade on it, very detailed trading plan for it, like this. It'll be under a video, and it actually gets automated on our platform. So this trade is actively live, and each day and each price, we have what we call a buy trigger. In this case, it's a breakout trade. And this stop is put in here in the profit zone, and all these are all in the machine where the cron job checks the prices and always compares. And basically, this is a real-time thing. So you get the alerts when anything happens. So each video breaks down what type of setup this is, and then as a member, you get the alerts when these are triggered. And at that point, you decide if you were going to get in it or not, and I do the same. So usually get an alert, and then you get an alert from me that I got into some, whatever I got into. And then as the trade goes on, like today, it hit its target. Today it popped up, hit its target. The alert went out. All the members, whoever was in it, had the opportunity to get out because the target was hit. They also have the opportunity to, just adjust it. But the important part of this whole process is it puts you in front of, it lets you know that a certain area is coming up. Doesn't have to work all the time. There's news out there. Lots of times when you see it red, and I'm standing up to this because I lots of times when you do get a stop out or something like that, these are what we call a stop out. There's news involved. In some cases, there's, and recently there's been this volatility and the market dropped 1,000 points, so it dragged all these stocks down, and that happens. That's going to happen, and that's why you have the stops in there.
ES oversold.
I think this was one of the ones. Even though we trade around these sometimes, this is just an automated thing. So we had a trend line. Let me see what happened here. This actually came down through that. This was the volatile market. We came, look at this now. Look at it now. It's amazing sometimes. You'll just tag those stops. Those stops are very tight that I put in here. So you always could adjust your own stop. You can adjust anything if you want to put these in as a bracket order. I want to, take consideration of the trend, but you can see we got a flash and a pullback. If I would have, I would have said after this candle, and, this is a really nice candle. You can put this is a big reversal candle. You can put a stop under that candle and you're probably good to go. And basically you were. It's actually pushed right back up. But, like I said, some of them will go through their stops. And then the other ones, of course, who hit their targets. So Tractor Supply Company hit its target. This was a great setup, Martin Marietta. This was one of the best bets of the week, and I believe I'll have some notes on it. Again, look at this: possible divergence, higher risk on early entry, buy trigger on a higher high, and confirmed divergence. So we had this big candlestick, and I said, all right, where's the stochastics on this? On the bottom here. So what I like to do is, if you do take out the lows, and at that point you're still holding up here, but you had a decent reversal, this didn't really turn. Sometimes you won't even see it like bend over, and the price drops hard, but it doesn't show up on the stochastic. That's a great signal. So this was it didn't show up a lot. It was a very decent breakdown, and we had a decent candle. So I said, all right, you know what? This is a good HPS with a follow-through candle would actually probably confirm that this was a divergence and would push back up, and this was good. So that's what we look for, a follow-through candle. If it broke down below the thing, divergence rule is underneath the divergence low, you put your stop. So it's a standard divergence play. Just a fast forward for you. God, all right. There's nothing better than that. That's incredible. And then we had the Seagate. I think that triggered. And that I traded this one. I was in and out of this one. This had a nice reversal, so I put it in as a divergence. It was a beautiful breakdown and cross back up. Now let me show you. Yeah. This was a new divergence down here. Let's see what this looks like on the other chart. They had some news, and then it came back up. So I have to show you the live chart on this to get a good picture of what we were looking at, STX. I want to show you the new stuff, really. All right, here it is. So that gap down was the divergence. The gap down was the divergence. Back here where we're looking at this, it was setting up maybe to be a divergence, but then it had that gap down, and this really was the divergence. So this is when we got in on this, even though it dropped down below, and now it just hit that. So that was a pure divergence, and that's the best setup right there. That's a qualified divergence. That's that's great. And that's why we're in a couple other stocks that I want to show you right now. Now, this one was looking good earlier today. I said, all right, Match.com, gap down. I want to get in it, take some December options, and just look for a retracement back up. Now they warned, so it's not a great when someone warned. I think they weren't warned. I don't know if they did or not. Actually, I think Square weren't warned. But, they did the dating sites and stuff. I don't see that disappearing. I don't know if there's too much competition. I don't know why. Didn't listen to the earnings call, but I know that's a quality name. And lots of times when we get a gap down and we see a divergence, so I took a shot on this going out. And it started working really well today. At the end of the day, it kind of sold off. Came back down a little. But it started ripping. And I went in the chat room. It's like, there goes the Match.com. Our calls were making money. Then it reversed and then actually just settled back down a little. Still looks good. Still looks like I want to continue to close that gap. So I'm in it. Probably not going to add any more to it. I'll let it play out. The SWK, though, is something as one of the infrastructure plays, this was one of the HPS setups that came down, flushed out, and then ended up being really, a really nice setup. This was actually almost a double bottom divergence too. It was kind of you see how we were holding right on that 20 line and that candle came down. It was very bullish at that point and it did run. I'm still holding some. I like it and I think it goes a little bit higher because I was considered as part of the infrastructure stocks and they're starting to talk about that'll be the first thing that they're going to be able to get in. That one and Fastenal. And the great thing about Fastenal is that is a picture-perfect centerfold of the stock, centerfold stock of the year picture. It has everything that we pay attention to in it. It's just a great... I want to probably print this out and do a webinar on it. A webinar on this. First of all, you have what we call, kind of a 1, 2, 3 pattern. But inside of these patterns, you have some good divergences. Like here, look at this low right here. And then this nice little low right here. Look at how high that pivot was. Right here, it was a pivot high. And if you went, you could easily went long here. You could easily went long. You take these trades until the rotation's back up. So, in some cases, depending on the size of the stock, what kind of stock it is, and debate on it, this will move 5, 6, 7 points. I mean, these trades off of a divergence are typically, I would like to say, a 3 to 7 day trade. 5 day being great. Just to get the biggest part of the move. When you have a divergence, you want to get the biggest move. So it's usually 5 to 7 days, 3 to 5 days, or say 3 to 7 days. Hard to pinpoint it. I would say 3 to 5 is on average. I want to get that much at least. And it's probably because the divergence works so well, you get a lot more if you let it. But So here we recently had another perfect divergence. Now this was a decent divergence, but this didn't fall into my criteria. But it was a steep divergence. I prefer to have that hold, and that's a decision you're going to have to come to on your own. You know,
Tradometer YM oversold.
You're going to have to come to that decision on your own, because a divergence works. The steeper the divergence, I think, the better it works. But this had something else going for it. All right, this has a lot going for it. First of all, you had a daily divergence. You had a lower trend line retracement. This stock had a nice channel. Then you had a rise in trend line from this pivot to this pivot to this pivot. So the price actually came right down to this area, plus a divergence. It was just a rock and roll area right here. Circled it out. I mean, and then from that point on, look at the bounce. I mean, it's obvious, but take a look at this. How good this looks. When you have a divergence, buy-side divergence, your stochastics are going to have to be heading up, but on a lower band, down by 20, 30, so you have that momentum. But when you have that set up and you have a weekly oversold and starting to curl back up, that is extremely bullish and should be considered for different type of trades, even an IRA type of swing. You have a weekly, you're going to get a much better weekly rotation. Having a glass of Coke. Beautiful. I mean, that gets me excited that I know that the next one's around the corner. I think our last really one I jumped on, I was like, wow, we caught this one. That's the thing. You have to do the research. You have to find them. That's why I'm trying to automate all this and get all these alerts out to you. The Rambot does it, on a short-term basis. If people are not familiar with that, that's the 1 minute, that's the 5 minute divergence detector that we have on our dashboard. And that just detects the divergence in the S&P. But now I want go out to the overnight trading, and go out a little bit deep, a little bit, I do the scans. I mean, we are doing the scans. We do find them that's what I do with the HPS setups. That's what I'm doing tonight. We're scanning and looking for these divergences. I don't even know what the hell I'm talking about. I just want it all automated. But this was a weekly check. So you want to have your criteria as a weekly coming off of that 20 curving up, pushing higher. Maybe it's between 20 and 50 in an upward direction. That's a very strong bullish weekly, stochastic rotation. So if you even have that going in your direction, the odds are that you probably have a couple weeks behind you already that's moved. Take a look here back in September, October. If you took do a scan, and there's so many different scans you could do, and I'm sure if there's programmers out there and knows the languages, they're easy enough to, put together that your scan requires you to find stocks with a weekly stochastics between 30 and 50 heading up. That's going to give you a bigger trending chart. Lots of times we look for it on the daily, but not many people look at it on the weekly. But if your daily and the weekly are set up, you don't want to miss that. So do you do your scans daily, weekly? I actually do those scans for you. I have them here for you. Let's see. I do these scans all the time. But for me, I'd love to have eyes on too. I want to confirm it. I want to make sure it's not, it fall. I could tell a good one.
Tradometer and Q oversold.
I could see a good one versus one that it's a little shaky. I'm not sure of, or the volume. It just comes together. You do it so much, it just, it's like, wow, that's a good divergence. That's a great divergence. You know exactly what great one is. So these are all these. This is using easy language and TC2000. And basically, you can make a condition. Basically you say, I want the stochastics to be greater than 20. I want the price to be holding. Excuse me. Let me have the Coke here. what was I going to say? Oh, for my flags, what I do is, I'll show you my flag setup. Strong trend with oversold stochastic. So it's, and there's nothing there. There's actually, oh, well, there is. Hold on. Strong trend with oversold stochastic under common stocks. But I do the S&P, and I think I didn't find any. See, it came back with nothing. It's also come back with no divergence setups. I also have a good scan for that too. But we're not seeing that because of the market right now. It probably is extended. Things are not set up to fit this criteria, which is a good criteria. So I can't show it to you as an example because there's nothing to show. I can't just put something in there if it's not there. But that works really well. Yeah, I saw some news on GE. It was down. It was like how many? I think someone just bailed at $9. There was a huge block of like 32 million shares sold at $9 after the market or something. But that reminds me of the next stock we're going to talk about, and that is BHGE. Now this is Baker Hughes, a GE company. It has a pretty, well, again, not a divergence that would qualify for my strict criteria, but it is a visual divergence. You had a little low, a double bottom low. And I said, all right, I want to watch that. And the other thing here that kind of jumped out at me, it was making a double bottom. So I said, all right, double bottom divergence. But, boy, it's like, it's attached to GE. Ill. It has cooties. So I'm kind of like just saying, no, I don't want to be part of that crap. The whole thing's going to go down. The whole ship is going under. So I passed on that, and I haven't looked back at it. The HBI, Height Stops was on with me earlier in the week, and I think there was some insider buying on this one, and I liked it, so I wrote it down. And it's also divergence. So you have this low back here. Let me see. We're on the daily. You have a low, and then you have a lower low between the 10th and the 29th or whatever. Definitely a higher low. I kind of like it. It's a wedge pattern, but it's $16, and that bothers me. But you could see after these stocks. Well, let's break the other one down here. Here's a nice little pullback on this. Whenever I see I can spot these things. You could just look at a chart and you could easily, from doing it for a while, you can see a wedge pattern very easily. Wedge pattern should typically break out at this level, and that's one of the things you always hear me say, is if you extend that bottom line and that top line, it would meet all the way down here somewhere, right? It would meet down here. So you consider this the beginning of the point. This is all the way to the end, and this area probably about 65 to 75% of the pattern, and that's where this wedge pattern typically breaks out of. Out of statistics. It was a great article from back in the 80s in Stocks Commodity Magazine, and they did a study on this, and that's how I remembered learning this. And I did my, and once I would back test this all the time, and I agree with it 100%. That's why I continue to promote that. But even better is lots of times you're going to get a divergence that defines a breakout of a wedge pattern, and that is even better. So what we have here is that wedge pattern, and we have a divergence, and we have that 65 to 75% zone being entered right now. So it looks good here. But it's $14. And why is it down this far? Let's take a look at a weekly. Well, it's not that bad. But the other good thing is, like I said, I think Rob said that there was insiders in this. So let me double check this one fast. I'm just going to put it up in the top here. HBI. And then I'm going to scroll down, down, down. First of all, let's take a look at some of the upgrades and downgrades. Upgraded at Stifle. That was on April 25th, 2018. They upgraded it from a hold to a buy. At the time, it was $23. Way to go, Stifle. Analysts, how much they pay you for that? So I always like to go back for if there's a big firm out there and they give them a good upgrade. It went from a hold to a buy April 23rd, day after my birthday. Let's take a look at it. April 23rd, August, September, May, April 23rd. All right. Well, look, you know what? Let's give them some credit. They did take that wedge pattern and came in and upgraded in the wedge pattern. It did move up a little and pull back, but eventually did move higher from their call. But they never followed up and said, hey, we're done with it. As far as I know, they're right back to where they started. But I give them credit for, calling a good setup inside of a good pattern. I think that's important. Neutral. Oh, initiated October 23rd. Standpoint research with a buy, but no price on it. All right, so that's that. And then let's go out to the insiders. Now, if there is insiders in this, there was 2 days ago, but then there was some insider selling too. So go figure. Go figure. I got to ask Rob about that one. Look, all right, so on November 2nd, Director bought 25,000 shares. Now he owns 131,000. So that's a pretty decent move. Then November 5th, Chief Administrative Officer, GC Corp Secretary, I don't know, something, sold 20,000. I don't know. I mean, you have to look into this person and see how many shares. Shares total 334,000. So maybe they just have to raise some money buying something or something, doing something. So I wouldn't be too concerned with that. But they are getting out at a cheap price. I thought there would be more insider buying down here. Either way, I'll maybe put it on the list so we could remind. I will put it on the HPS list watch list with a buy trigger at the 2-day high here. Maybe I'll even take that too. 2-day high. So let me do that. Haynes Brands HBI. I'll probably put that on tonight for tomorrow before I go home tonight. I'll do that chart and send that out. That would be a breakout above those 2-day highs, but I'm not going to worry about it now. Let's get through this video. I'll send out that. That'll be in the, what do you call it? It will be in the high probability watch list section by tonight. So that one is that. This was Fastenal we talked about. Let me take a look at the markets right now. Oh, look at the pop here. Oh, nice pop. Let's take a look at the news. One thing I was going to say before, I was looking out of the corner of my eye. I said, oh, man, let me get in. I was in the middle of this, and I said, I think I see a divergence showing up. I looked at the tradeometer. So the tradeometer had 2 peaks there on the bottom. 2 buy signals. 2 good buy signals. And the way I saw that one fast little drop, I said, oh, that's probably, but I had the other chart up. I said, oh, I forgot to look. Let me go look. And there it is. The divergence is there. And boy, look at that pop. Now, they're probably news. What time is it? It's 8:30. Something that is like, is Asia opening up now? Or there might be some commentary coming out. I'm going to check fast for you. But, that would have been great. That would have been right on the camera and everything. Well, I was so ready for that one. Take a look at the take a look at the tradeometer here also. I want to bring that over on the screen. Let's see. Look at that. Look at that. There was a little buy there, but then you have that 2 and that. Look at it. Caught the bottom. It caught a divergence in tradeometer. And you know what that means? A tradeometer signal, the Tom, and a divergence, a clear divergence like you're seeing, is a super signal. And I actually have that go out as during the day. I'd have that programmed in to go out. If I do see it, you get a little alert on it. But that was perfect. Let's go back to the main chart here. That was a perfect divergence. You cannot deny how it works when it does qualify. I mean, if you qualify a divergence like we want to, and it really shows itself, got to take those. That's what I was talking about before. That's why we have to have that overnight alert. All right. So next thing up here. I am still in this Kala, K-A-L-A, and they had some insider buying recently. It almost looks like there was a little spike today. Well, little candle, but it drifted back down and a little underwater on it now. But it's down at a nice level where, I'm willing to be in this one down at $7-8 level. I'm not adding to it, but I'm still thinking that there is a divergence. Kind of flatlining here. I have no idea why I am looking at this, but I think it was just because of the insiders. So I took a shot on it, but definitely not an HPS candidate. Let's go to the next thing. Let's take a look at Apple here for a second. Apple, it pulled back. It was under $200 for a second. That was a time to get in, if under $200. Right back down to the 200 period moving average. That's just like ridiculous. Look at me. It's the first time I've been at the 200 period moving average in, a long time. So, let's see here. I mean, every time it touches that, it rallies good. What I find myself doing is following a lot of the same stocks week after week because I'm getting really familiar with them. Most of the stocks that are on my main screen. And then I try to rotate them out. If I get a new stock come in, I'll bring it up and I'll try to get rid of the ones I haven't been looking at. But now I have so many stocks up there, and I always want to keep that Amazon up there. And these little squares of charts. The real estate on your monitors, though, becomes valuable after a while. Tupperware. So I've been watching, stocks like Tupperware. I don't want to put them off. We had some good bottom calls on these. They've slowly bottomed out and pushed back up. That and the WDC and the Seagate. The WDC still could be something happening brewing down here. I like finding sometimes these type of bottoms. So I'm watching all those. I'm watching the LXD. These are the cheaper ones, the LXTI. It's just choppy. I mean, love to get the big news on this, whatever it is, to shoot this thing up. It's a cheapie. It's a lottery ticket, LIXT. They do their oncology drug company, and then with the Veru, of course. Still holding all that, and that's been acting okay lately. It's actually looking pretty good. It popped up off the trend line. It did have that secondary, that offering that sucked. But, now it's starting to move back up a little. Next level is a little bit, a little bit higher. It looks like that is about, what was that? Oh, I don't know what that was now. Let me see. $154. So 154 is the next big level. Then that's the gap close. Then up above us. Anyway, that's a news. That's one's going to be waiting on news also. To move that. Anything cheap, you're waiting on news. The GTX IMN, another cheapie. This one got a hammer. I said, I'll get some here and see if we can get a bounce on it. Nothing going on there. Nothing. Anyway, but not important there. Just wanted to update you on that. The Vulcan Material, the Martin Marietta, the Tractor Supply Company. I have that one written down. That's a strong stock. It looks great. That was a breakout play that we mentioned last HPS setup, right? That's what it was. That was Tractor Supply Company. ESRX. I have it written down. Let's see why. Oh, it's just strong stocks. These are just very strong stocks. No problems there. I'm going to continue to do a couple more scans here on a video. Look at that LABU. It's just a matter of waiting it out and seeing what comes up next. It's not going to get away. There was a nice divergence here in CMGI. CMG. Remember CMGI? Any traders out there remember CMGI? Made my biggest trade in CMGI. Back in, I think it was 1999. And there was an incubator. It was a company that bought other stocks and those other stocks. It was almost like modern. I don't know. It was interesting. If one of those stocks hit, they went to market and stuff. The incubator would gain. And that stock was. I remember I made 60 points in a day on it once. But remember, this was a tech bubble, and I just happened to be into earnings and stuff. So it was a huge move, and I had a lot of shares on it. I think I had like 400 shares. It was one of my best trades. But I felt good about it too, Didn't see this. This is a little tougher divergence, though. Let's not give everything credit. Here's a perfect divergence down here. This is a gap down, held up, it turned back up. After a couple of days, it turned back up. That's what I want to see in Match, actually, tomorrow, Match.com. Here we had one that was a low, and we kind of see this lower low right here. Yet it's not really going up, but the stochastics are going up, and finally it held off a little. So it's really a false divergence. This one is, I wouldn't say that, you can qualify that one as a really working one, because if you had a divergence here and you went with it, you should have put your stop underneath the previous divergence low, and this little candle would have shook you out. Now, exactly what happened here, there might have been a little news out here that shook people out. Or something happened that shook everyone out. This should have held, and it proves that it should have held because it came back right really fast. That's what happened to the STX Seagate. It gapped down and came right back, and right when it came back up here, this is where I got in and took this trade off of this divergence. It's seeing that it had strength and it wanted to come back up and test that level. It was an easy divergence to see. I haven't looked at the FANG stocks too much. NVDA, NVIDIA. I'm just waiting for the right setup. You know, like I said, there's not much other than this didn't. I have a list of divergences. That's what I have for us. A list of potential divergences. Here they are. Let's see what they. That's a great thing to do right now. CS, Credit Suisse. Nothing yet. All right, nothing yet going there. JP Morgan, we took the last of the trade off today. What a great trade this was. This was a high probability setup. It was a trend line. X marks the spot. Flag. You had the right side, right movement there, and also the weekly is on your side too. And this is still very bullish. So many weekly setups here. So many weekly setups. And this looks very, very strong. All right, and I'm not disappointed I'm out of it, but we got a nice pop on this. 2-day pop. Took it all off now as of today. JP Morgan, let's see here. DGX. Nope, nothing. I'm sure I would have seen these on my scanners. PSX. Not yet, but maybe something happening. This is what we need. We need just a little action, a fast drop below the lows. I'm just holding up here, so we'll keep an eye on this one. Home Depot I have written down. I don't think that was, oh yeah, that was a little bounce. So we'll see if we get a retest. Nothing going there. LLY, that was a good stock. Occidental Petroleum OXY, I already checked that. It ran away. So no divergences there either. There were some potential divergences I had written down. They needed to be just watched. All right, well, that's it for that. Not seeing anything else. The HBI, I think we're going to put the HBI on the list for tomorrow at least. And, tomorrow we'll have more setups. And we have the setups that are active right now. So refer back to the HPS watch list for the current setup still. There's a short on there. And I'll get the, I'm going to get the HBI out on there now. And I'm just looking around. God, I want to find more stuff. But you got to have patience. Patience will make you money. All right, so that's it for the video. Sorry, this is kind of a bonus video. You're still going to get your HPS video, but this is something for tomorrow. I was doing extra research. What time is it? Is it 9 o'clock already? 9 o'clock. Well, hopefully I'll send this out real fast. All right, we can finish it.